Hi, everyone. Thank you for joining us today for our Export Bootcamp. I'm Ashley Elrod, Program Director for Economic Development at the Indy Chamber. And just a quick overview of what you're about to experience today. We've developed the Export Bootcamp webinar series as a resource for businesses like yours to help navigate the export waters and help answer some of those initial questions that you might have when starting to think about doing business globally. This is all part of the Indy Chamber suite of services dedicated to helping companies like yours grow. And for more information on some of our other services like free one-on-one business coaching, events, things like that can be found at indychamber.com/globalindy. And programs like these are not possible without the support of our wonderful sponsors. So today's webinar is brought to you by InZone and FedEx, and we certainly thank them for their support and recognition of the importance of going global and the Global Indy series that encourages our region to expand their global reach. Today, I hope you really do walk away with actionable tips on how to enter into sales and distribution agreements as a pathway to exporting your products, and really oftentimes the first step in export activity for your business. In a moment, I'll turn this presentation over to our presenter, but I do have a few housekeeping items just first off. If you're experiencing any technical difficulties today, send an email to communications@indychamber.com at any point, and somebody will assist you right away. We'll also allow for about 10 minutes of Q&A at the end of the presentation, and I welcome you to either type your question in the chat box in the corner of your screen, or we'll also open up the phone lines for you to speak your question as well. So just keep that in mind, and our presenter will answer those at the end. And then any typed questions or questions we don't have an opportunity to answer during our allotted time, we'll be sure to follow up via email and then also post those questions and answers at the at our website at indychamber.com/globalindy. So to get us started, I'd like to introduce you to Angella Castille from Faegre Baker Daniels. Angie co-leads the firm's corporate international practice, focusing on international and cross-border transactions, and counsels clients on partnerships, joint ventures, compliance, and other international business matters. I also thank Angie for being part of the steering committee that helped us develop our global trade and investment strategy. Thanks for your guidance and expertise during that process. And lastly, a big thanks for being with us coming off of a pretty long trip in Faegre Baker Daniels London and Shanghai offices, so I appreciate that. So to get us started quickly, I'll hand this back over to Angie.
Well, hello everyone. It's good to be here today, and it's especially good to be in the United States, I have to say, after that long trip. We're going to talk about international sales and distribution arrangements today, and please feel free to ask your questions at the end of the presentation. We're going to go through this fairly quickly, but I hope at the end of the presentation you'll have a good idea of how to issue spot, and that's mainly what you need to understand when you're trying to set up international sales and distribution channels. So let's just talk first about, I'm going to try to advance this slide and hope I can do this correctly. Joe, can you come help me? Sorry. Okay, so let's talk about sales agents, distributors, and direct sales, and let's talk about what the difference is between them. In the course of the presentation, we'll talk about the problems specific to those relationships that can arise. We'll also talk about what makes a contract international, and we'll talk about some of the basic contract drafting issues you should consider when you're entering into distribution and sales agency contracts, and then some practical considerations as well. So let's just kick off by talking about what the differences are. Okay, so first of all, what is a sales rep or a sales agent, and what's a distributor, and what's the difference between the two? The biggest difference is that a sales agent is actually representing the seller and is selling the product and doesn't actually take title to the products. What they do is to promote the sale, and then they go back to the seller and say, here you go, I've got the sales lead for you in Germany or Austria or wherever they're selling, and it's really the seller that is selling the products. And the sales agent or sales rep is actually being paid in the form of a commission most often. And sometimes those sales agents are not just helping to promote the sales of products, sometimes they're also performing services like, helping to do quality control, or they might be helping to counsel on the use of the product. So there can be services in conjunction with sales of products as well. Then on the other hand, you'll have a distributor, and a distributor actually does buy and resell the products. They take title to the goods being distributed. And so somebody who's a distributor in France will be buying from the US seller and reselling in France or other parts. And they're actually taking title to the goods and reselling in their own name. So that's the biggest difference between a distributor and a sales representative. Sometimes I'll hear the terms get mixed up, but in my mind, I'm always asking myself, does title transfer or not? If it transfers, we're really talking about a distributor. Now, why do we care about that? Most companies, when they're globalizing, they start by just selling on a purchase order basis, and you might get a purchase order in, and somebody might want to buy from you from any place, England or China or wherever, and you might just say, well, hey, what's wrong with just selling, on purchase order? Well, there's nothing wrong with that. It's just that if you really want to formalize and increase your business, creating those sales channels that promote your name and your company are really vital. And that's why most companies decide to create sales and distribution networks, because they want to have a more formalized approach to really brand their products outside the United States and equate them with some quality standard. So what are the typical problems that we see associated with agents and distributors? I'm going to tick through a couple of these, exclusive versus non-exclusive. You've probably heard that term before. Generally speaking, when you're talking about exclusive sales reps or exclusive distribution um, channels, what that means is either with respect to a geographic territory or a type of a product. So, for example, in a particular industry, in the medical device industry, or in the RV industry, or in the automotive industry, or the geographic example might be throughout Europe, or it might be throughout a particular country. So, exclusive versus non exclusive is a way of saying that only this particular distributor or sales representative can sell products throughout that geographic area or that industry area. Um, and usually the term exclusive does not preclude the manufacturer from making sales into that area. But if you use the term sole and exclusive, then those terms generally exclude even the manufacturer for selling into that exclusive territory. Now, the kinds of problems that can crop up in conjunction with exclusivity and non-exclusivity have to do with certain antitrust considerations. That usually comes to bear when a particular seller or manufacturer has a very large market share and a dominant market position. So we're not going to go into all the permutations of antitrust, but that is one issue that you always look at with respect to creating exclusive versus non-exclusive distributors and sales representatives. Secondly, sales representatives and distribution arrangements can trigger franchise laws. What's a franchise? All right, well, let's think of KFC, Kentucky Fried Chicken. That is the typical franchise. What do you associate with that? You associate a suite of logos and trademarks, a certain look, a certain expectation about the quality of the product you're going to get in association with that. And because of the stringent requirements that relate to being a franchisee and that are imposed by franchisor, those relationships are generally speaking protected by law in many countries around the globe, including throughout the United States. And they trigger certain registration and filing requirements. So we always want to check to see whether or not a sales and distribution arrangement can trigger a filing requirement or some sort of a requirement under the franchise laws of that country. Thirdly, termination rights and associated damages. This is probably number one on the top 10 things you can find with respect to sales and distribution arrangements that will cause problems for somebody trying to sell into a foreign country. And that is that sales representatives and distributors are protected by their home country laws, and they're protected from being terminated without cause, or they may be protected from being terminated without adequate notice. Either or both things may be protected by law, and the consequence of not knowing about these laws is that if you try to terminate that distributor or sales rep, you may be responsible for paying severance damages to them as calculated under the laws of those countries. Then fourthly, proprietary information and competition. So when you're setting up a sales representative or distribution channels, you're going to be, as a company, giving that particular entity a lot of information about products, a lot of information about who customers and end customers should be, what your strategy is for marketing, and all that information is information that you want to make sure that you protect because you want that person to be honoring the relationship and not passing it on willy-nilly to other competitors. So oftentimes we'll find in these agreements provisions that really relate to protecting that kind of proprietary information that gets passed on, as well as the kind of proprietary information that relates to the product itself. And then finally, liability for taxes. To the extent that you are paying a sales representative certain commissions, there may be withholding tax that is required in that country. There may also be income tax that is due. That individual, if it's an individual, or that company may make some claims against your company for employment or wage claims, depending upon how much control you have over their activities. So, talking about taxes and possible employment liability really depends on the degree of activity and control that you have in that country in association with the sales rep. Now, distributors, with respect to them, the tax issues that typically arise have to do with the sale and resale of the products because they're going to be importing the manufacturer's product into their country. They may or may not be responsible for import duty, and then with respect to resale, they may most certainly be responsible for paying any kind of sales tax or value-added tax that are owed on the further sale of the products. And it's important to establish which party, as between the manufacturer and the distributor, has the obligation to remit those taxes. So that's a very quick capsulation of the typical issues associated with these relationships. In general, with respect to any kind of a sale of product out of the United States, the seller wants to be sure that they get paid. That's probably the number one thing. But they also want to make sure that they have product approvals in association with their products being distributed into foreign countries, that they understand what standards and what warranties they're responsible for under the laws of that target country. And also, they want to understand to what extent they're responsible if there's a recall that is required. And so, those are the kinds of issues that need to be addressed in the contract between parties so that there's no guessing about whose responsibility and whose expense it is. And then for the buyer, so in this instance, for example, a distributor, the buyer wants to make sure that they're actually going to receive the goods that they've purchased, that the goods conform to the product standards and are not defective. And they want to make sure they understand what warranties they can extend when they further sell the products to end users. And to what extent those product approvals and standards and recalls are going to affect their end customers. They need to understand all those things. So we have some common issues that we have to address, both on the buy side and on the sell side. And it's the purpose of the agreement to address exactly those issues. Okay, so just a very standard question. How do you know if a sales or distribution agreement is actually international sales agreement? I get this question a lot, and for me, it boils down to where are the parties to the contract actually physically located and doing business? Okay, that's easy. You're in the United States and somebody's in Mexico who wants to buy your product. That's pretty easy. The location of performance. All right. So if you're a sales representative and you're supposed to be representing the manufacturer's product someplace in Europe, then the place where you're performing your duties makes it a cross-border contract because even though you might be a U.S. person, you're performing that contract outside the United States, and therefore you're responsible for complying with the laws outside the United States. And then payment. Your payment may not occur in the United States. You may start in the United States, but receive payment in another currency or subject to currency controls in a foreign country. So payment can make the contract an international contract. Okay. Okay. So that's our quick summary of what makes a contract international. With respect to how other laws affect our contracts from here in the United States, it's important to understand that our U.S. laws also apply outside of the United States. The main laws that I want to point you to are export control laws. Once you export a product from the United States, you are required, wherever those products go, to comply with U.S. export controls. Secondly, the Foreign Corrupt Practices Act, which prohibits any bribery of foreign officials, applies outside of the United States to U.S. persons wherever they act throughout the world. And then antitrust laws in the United States can also apply outside of the United States to the extent there's an effect on U.S. commerce. And then finally, we want to take a look at treaties. So a treaty is an agreement between countries. What kinds of treaties might have an effect on distribution agreements? Well, things like trade agreements. So for example, NAFTA has an effect on the duties that you pay. For example, we have a number of treaties that the U.S. is a signatory to that a lot of countries have signed on to. The one that's the biggest, has the biggest impact in sales, is the UN Convention on the International Sales of Goods. It applies because the U.S. signed that treaty, but it applies to any contract in the United States with a foreign contact to it, and is going to apply by operation of law. So whether or not you want it to apply, it does apply. And then there are regional laws like EU regulations that whether or not you want them to apply, they're going to apply if you sell your products into EU member countries. And then there are other things that you'll run into, international commercial standards, often in coupling with delivery terms or letters of credit. You'll see some references to the UCP. Those ways of doing business have been formalized and are usually agreed upon by the parties. And then finally, local foreign laws and regulations can apply whether or not you want them to the performance of the contract. And we'll get into that in a little bit. Okay, we're going to go through this as a quick checklist of what you have to worry about with a contract. Not every one of these issues will pertain to your contract, but many of them should be considered anytime you do a contract. So very quickly, who are the parties to the contract? It's a very basic issue, but you won't believe how many times I work with clients who haven't properly identified the full legal name of the contracting parties. And by that I mean every single aspect of the name, including the Inc., Co., or Limited. And then where are these people located? What is their exact legal address? When you're doing business outside the United States, if you don't have that exact legal address, that may be the only way that you'll be able to sue that counterparty. So it's important to make sure you actually have the legal address. And then finally, in some countries, you're not permitted to do business beyond the scope of what your business license says you can do. And understanding what that company's name is and what its scope of business is important to make sure that the contract you enter into is actually legal. Next, and this sounds pretty logical, but describe the goods that are being sold. Well, it seems logical and it is logical, but I raise it for another reason, which is that U.S. export controls require anytime you sell a product outside the United States that you actually classify your product and put that on your declaration form, the actual classification for export purposes. And in addition, you should be identifying where the product is going to what country and to what individual to make sure that the product is not going to embargoed countries or persons who are terrorists or supporting things like narcotics or weapons trafficking. I'm going to talk briefly about services. They also fall within the sales representative description of what happens in those agreements. And oftentimes, the description of what a sales rep is supposed to do is not very exact. And if it's not very exact, it's really hard to say that somebody hasn't done a good job. So it's important to anchor those expectations in the contract and describe them, because then you can say, if you have to terminate that person, exactly what they failed to do, and you have a good basis for saying they're in breach of the contract. But in addition to that, oftentimes we see in foreign contracts that vague descriptions of what service providers are supposed to do will actually mask payments that are really bribes going to foreign officials. And so we want to make sure that we understand exactly what is expected of that service provider so we can make sure we're catching any kind of corruption. And then finally, we want to make sure we understand whether there is an applicable local law or tax to the services of the individual in the contract that you're dealing with. And unless you have that well described in the contract, you won't be able to get a handle on which types of taxes and withholding might apply. So the next point is another very obvious point, but it is the currency of payment and the price of the goods. You may not think this is a big issue, but the dollar right now is very strong against most other currencies. And so if you're asking to be paid in dollars, you may experience quite a bit of pushback from buyers, because those buyers realize that as the dollar gets stronger, it gets more expensive for them to buy US goods. So that's why in international contracts, the currency of payment is always a big issue. Similarly, we usually will address who has the risk if the currency or the currency of payment changes during the course of the contract, because of course, whoever bears the risk is the one who's going to have to pay when it becomes more expensive to pay under that currency. So it needs to really be addressed within the contract. And then in some countries, there are also foreign currency controls. So you can't necessarily freely trade in that currency. So it's important to understand that and to be able to determine whether or not you can actually get currency out of the country where you expect to receive payment. Same issues with respect to the payment of services, with respect to foreign exchange control and currency of payment. Generally speaking, the gold standard for getting paid in a foreign contract is to be paid by a letter of credit if you are the seller. And that is because that is a form of being sure that as long as the issuing bank for the letter of credit is in business, you're going to get paid. And so generally speaking, that's what we recommend when we're talking to our businesses that are trying to sell to foreign buyers. On the other hand, a foreign buyer would much prefer to deal with the seller on open account. But there's a lot of risk around that. So those are the two spectrums that we run into. Sometimes we can find sellers that have the bargaining power to be able to require buyers to pay everything in advance. And sometimes there can be a middle ground where they require delivery documents to be presented, and then payment is made against those delivery documents when they're deposited with the bank. So those generally are the four methods that we see, and they generally will depend upon the relative bargaining strength of the buyer versus the seller. Okay, delivery. This is a really big issue in international contracts because generally speaking, a lot of things key off of when products are delivered. For example, the risk of loss of the goods, meaning if I ship a product from the United States, when do I stop having the risk that if the ship that I shipped it on goes down, I have to pay for a replacement. So when passage of risk of loss occurs is a big issue simply because there are so many more dangers attendant to sending a product overseas. Then In addition to that, risk of loss passing also, generally speaking, helps to determine when acceptance will occur. So, acceptance or rejection of the good. When does the warranty start for the buyer? And also, in some countries, delivery also determines when the passage of title will occur. So, those are all issues that need to be addressed in the contract because there are consequences that are financial in nature as well as legal in nature that attach to when delivery occurs. Now, in an international contract, we very often see international delivery terms called Incoterms, and they are used because the parties agree to use them, but you'll see them abbreviated according to the year that the version of the Incoterms has been adopted, and the current version is 2010. So you'll see DDP or FCA or FOB, Incoterms 2010, because that's the current version. And that has a very specific definition and meaning. As a seller, you have to be very conversant with those terms to understand what you're actually agreeing to if you agree to use those international terms. And then we've talked briefly about the Convention on International Sales of Goods. That's going to apply to your contract unless the parties agree that it shouldn't apply, as long as you're selling from the United States, because the United States has signed that treaty. Warranty, product liability, recalls, and insurance, these things go hand in hand. In many countries, even if you have a standard warranty that you give with your product, local laws will require or prohibit you from excluding certain coverage. So it's important to understand what effect your warranty actually does have in the country where you're selling the products. Product liability and recalls are country specific. So the standards that we have in the United States with respect to product liability and recalls do not apply worldwide. So it's important to understand how those local laws impact recalls and product liability in that country where you're selling your products. And then insurance coverage is especially important. It's important to talk to your insurance company, your insurance provider, to understand what the scope of coverage is and what the currency of coverage is to make sure that your products have adequate product liability coverage wherever they're being sold throughout the world. IP, this is a consideration that many companies don't think about until they're already deep into selling into foreign countries. But in most countries, the rule is that the first to file for IP protection, such as trademarks, patents, or copyrights, is the first to receive that right. So it's important to know if you're selling your products outside the United States, whether or not your product will infringe an existing trademark or patent or copyright. And you want to know that ahead of time so that you don't receive a cease and desist letter that prohibits you from selling your own products into a foreign country. There is a cottage industry in many emerging countries. China is the prime example. But it's a cottage industry to register trademarks of foreign companies in that country so that they can extract a licensing fee or some kind of a fee to transfer the trademark registration to the actual manufacturers for use in that country. So you should just be aware of that before you start selling your products into a foreign country. And then dispute resolution. So you may want to resolve your dispute in Indiana, but that may not be the most practical way to resolve a dispute if you're doing business in Europe or if you're doing business abroad in China or Japan or in anywhere throughout the Asia Pacific region. And that's why the typical standard that we see in international contracts is arbitration. And the reason for that is because there are no treaties that the U.S. has entered into to enforce foreign judgments that are rendered outside the United States within the United States, or for us to get a judgment in the United States and have it enforced in a foreign country. There is, however, an international arbitration convention that the U.S. has signed on to, and over 100 countries have signed on to. It's a convention that says if you have a foreign international arbitration award, that if you're a member country, that the countries will enforce those arbitration awards without having to reopen the merits of any kind of a case. And that's why you'll usually see arbitration being called for in a contract. Having said that, there are a lot of companies that don't like arbitration because arbitrators oftentimes will split the baby. Oftentimes, the results that come from arbitration are not as clear cut, and they want to have the opportunity to be able to appeal the results. And so there's a lot of mixed reaction on whether or not to use an arbitration provision. But I put this out there just so that you understand it's a point to discuss and understand very well. And then these are some miscellaneous provisions I think that you will see in many contracts. A big one that you'll normally see is choice of law and force majeure. A force majeure provision just means that it's an excuse for the seller not to be able to perform, and it usually has to do with very big events, things like catastrophes, wars, strikes, earthquakes, things like that. And so it is a clause that is important, especially if you're selling into emerging markets where very bad things can happen sometimes. And then with respect to the choice of law, that is the underlying law of the contract that's going to govern any kind of dispute about what the meaning of the contract is. So those are two very important provisions it's important to take a look at to make sure that you understand very thoroughly before you sign an agreement. How am I doing on time? Okay. Okay. Let me just talk quickly about some very practical considerations as a takeaway. You might be asking yourself, how am I ever going to navigate all this stuff? Well, lots of U.S. law firms have been navigating these waters for a long time. Our law firm, for example, has relationships with law firms in over 120 countries because we belong to an affiliation of law firms. Many of the law firms throughout Indiana also have those affiliations. So your local law firms can be a good place to start. Oftentimes, one thing that is important to stress for you and for you to understand is that it's important to have local counsel in those countries where you're doing business. Oftentimes, we'll get clients asking us what the laws of Germany or Mexico or Canada are. We're U.S. lawyers. We're not licensed in those jurisdictions. We can get you local counsel who can give you those answers, but U.S. lawyers are not generally speaking licensed to give opinions about foreign laws. Secondly, it's really important to know who you're doing business with. I know this sounds obvious, but it's so important to understand the reputation of the people that you're entrusting your products to make sure that they do have a reputation for integrity and honesty, because that will affect your product and your brand in those foreign markets. And then finally, it's important to understand the regulatory risks that are associated with the sale of your products outside the United States. We talked at the very beginning about trade sanctions and corruption, the Foreign Corrupt Practices Act, and antitrust considerations, but also with respect to money laundering, making sure you understand that those folks that you're doing business with are also engaged in legal enterprises. So with that, I'll open it up for questions. I see questions. They're very small. Sorry. Yeah, you okay. Okay.
All right. So our first question is, are there any specific U.S. agencies or organizations that are located in foreign countries that could be of help in terms of identifying local agents, distributors, networking, and or be able to provide better local information?
So let me put in a plug for our good friends at the U.S. Department of Commerce. They have that exact service throughout the world, but you can start with your local U.S. Department of Commerce folks, and they will help you really for free help locate some of those resources that you need no matter where you are looking throughout the world. And then let me put in a plug also for chambers of commerce. We have a number of U.S. chambers of commerce that have offices throughout the world. They're another fabulous resource, and I'm sure the folks here can help steer you to chambers of commerce in those parts of the world where you'd like to do business. They do white papers. They help advise you, and they can be a fabulous resource.
second question, if a company wants to put an international team together, what kind of partners would you suggest to start?
Well, it's a good question. I think the partners that come to top of mind, sort of like a football team, you have to have a quarterback. So you have to have somebody at your company who is going to be dedicated to being the resource person for the initiative. I can't stress enough how important it is to have that cheerleader at the company. But then there are sort of the other support counselors that will keep you out of trouble. A lawyer is a very good partner to have, and almost indispensable in these days of business, in business and business risk. In addition to that, an accounting firm that has international resources. Now, we have great accounting firms in this state, and many of them have partnerships and affiliations that reach well outside the United States. Ask them about their resources. Almost every one of them will have resources. And then bankers. It's so important to have really good bankers that can help you figure out whether or not you are incurring great risk of not being able to get paid. They can help you figure out whether or not the banks that the buyers intend to use to pay you are solid. Believe it or not, there are banks that are not solid. So that's what our folks here in the United States, our bankers, and many of them have extremely good international resources. They can help you. Start there and build your team from there, and I think you'll have a lot of resources to work with.
Great answer. I think the other questions have been answered. You mentioned that the sales and distributors are protected under their own home country laws. Does the U.S. offer any kind of protection for our firms in these cases? Which I think you covered at a certain point. And then, of course, the currency question, what options do I have to protect myself once I'm in a distribution agreement, sales distribution agreement with the fluctuations? You covered that.
Yeah, I think one thing about the currency fluctuation I'll say is if you can have that discussion up front about what happens if the currency goes beyond a certain conversion point and you can establish a base currency conversion rate. If you have that discussion up front, then you can talk about whether or not you can then renegotiate pricing when it goes outside that norm. That's the standard way to deal with it. Thanks.
Great. And then I think we have the lines open as well, right? Any there? All right. Sounds like if any of the attendees have any questions, the lines are open for you to ask in the last few minutes of the webinar. No? All right. Well, I'll just take a moment to thank Angie again for her expertise. I think for me, this was a really great primer on sales and distribution agreements, and hopefully each of you found it helpful as well. And don't forget that this is part of an overall library of export-focused webinars that we have on our website at indychamber.com/globalindy. And we look forward to having you participate in our future webinars, which will keep you in contact with that information coming up. So thank you all. Have a great week.